Have you ever woken up, checked your phone, and seen that a military strike thousands of miles away has somehow made your stock portfolio tank? It's a crazy feeling, right? But it gets to the absolute core of how interconnected our world is. So today, we're going to trace those financial shockwaves. We'll look at what happens in the first few minutes and what the fallout could be for months or even years to come. Okay, let's get into it. And that right there is the big question, isn't it? How does one single event over here cause this massive ripple effect that hits every market on the planet? We're talking stocks, crypto, gold, everything. It's not just about the conflict itself, it's about the chain reaction. And we are going to follow that chain, ripple by ripple. So this is what started it all. On February 28th, news breaks of military strikes on Iranian targets. And before anyone, any world leader, can even get to a microphone to make a statement, the markets, which are kind of like the planet's digital nervous system, they just start reacting instantly. And this is the moment where the entire world just holds its breath, waiting to see what happens next.
So let's start with that very first ripple, the immediate, almost instinctual gut punch reaction from investors. This is pure, raw fear being priced into the market, and it happens in the blink of an eye.
And this is what that fear looks like, minus 521 points on the Dow Jones. Now that's not just some small dip, that is a massive signal of panic. You have to picture it. Hedge fund managers, huge investment banks, they're all scrambling to dump stocks before they even know the full story. It's a race to get out of the way of what they think might be a freight train coming down the tracks. You know, what we're looking at here is a textbook risk-off move. The best way to think about it is like a herd of deer in a forest. They hear a loud crack, and they don't stick around to see if it was a hunter or just a falling branch. They just run. For investors, that means selling anything that feels risky, like stocks, and running towards things that feel safe. And that shockwaves? Well, it hit way beyond Wall Street. Over in the crypto market, a mind-blowing $128 billion in value just vanished. And get this was happening over the weekend, when traditional stock markets were closed. Because crypto trades 24/7, it's often the very first place the world gets to react to huge news, which makes it this incredible real-time barometer of fear. And this quote from Justin Donathan just nails it. While the New York Stock Exchange is dark, the crypto world is wide awake. It really does become a pressure valve. It shows you just how much anxiety is building up in the system before the opening bell even rings on Monday morning. All right, so that first shock is just the beginning. The second ripple, and you could argue this is the most important one, spreads out from the very heart of the conflict, the global energy market. To really get what's at stake here, you have to understand this one little stretch of water. The Strait of Hormuz isn't just some shipping lane. It is the main artery for the world's oil. If there's a problem here, it becomes a problem for literally everyone on the planet. And here's why. Every single day, 20 million barrels of oil pass through that one tiny choke point. That's not just a big number. That's the fuel for our cars, the energy that powers our factories, the stuff that keeps the lights on. Any disruption here isn't a small problem, it's a potential catastrophe for the global economy. And this chart just puts it in perfect perspective. 1/5. 20% of all the oil the entire world uses squeezes through that one little strait. Sure, there are other routes, but they can't handle nearly enough to make a difference. If this artery gets clogged, the global economy could literally have a heart attack. So the billion-dollar question is what happens to the price of oil now? Analysts basically see three paths forward. The best case, a limited attack. The conflict fizzles out and prices pop a bit but come back down. But look at the second one. Expanded conflict. If things escalate, oil could spike by as much as $60 a barrel. And even if it just simmers, this prolonged tension scenario, we're still looking at permanently higher prices. That's because of something called a risk premium. Basically, the market just builds in an extra cost, forever, just because of the uncertainty. And that changes everything. Okay, so as all this fear ripples out, it doesn't hit every part of the market the same way. In fact, it does the opposite. It creates this massive divide. And suddenly, you have very clear winners and very clear losers. You can see the two main strategies play out right here. On one side, you've got the safe haven move. That's the flight to safety we've been talking about. People dump stocks and pile into things like gold, just trying to protect what they have. But on the other side, you have the conflict bet. These are investors buying into companies like defense contractors that might actually benefit from war. It's two completely different mindsets reacting to the exact same news. And this number shows you just how powerful that urge to find safety is. Some analysts are saying the demand for gold could push it all the way to $5,500 an ounce. I mean, that would be a historic record. And it tells you just how much long-term trouble the pros are getting ready for.
And then you have the other side of that coin. As tensions heated up in February, the defense industry's index jumped 4%. You're talking about the big players, Lockheed Martin, RTX, Northrop Grumman. Their stocks go up because investors are betting they're about to get a whole lot of new government contracts.
This quote right here gets to the absolute heart of that strategy. The initial stock jump is about the war itself, but the real money, the long-term value for these companies, comes from what happens after. A fighter jet sold today is a 30-year contract for maintenance, parts, and upgrades. The war might end, but that revenue stream goes on for decades. All right, now let's zoom all the way out to that final widest triple. This is the one that goes beyond the trading screens and actually hits the real world. This is where a conflict in one region starts to affect the price of gas in your town and the cost of groceries at your store. The one word that sends a shiver down the spine of every economist is stagflation. It is an absolutely toxic mix. You get rising inflation, mostly from high energy costs, so everything gets more expensive. But at the same time, all that uncertainty and high cost makes the economy slow down or stagnate. It's the worst of both worlds, and it puts central banks in a totally impossible spot. And this is how it happens. It's like a row of dominoes. First, the conflict keeps oil prices high. That makes it more expensive to make and ship everything, which pushes up global inflation. That forces central banks, like the Fed, to keep interest rates high to fight that inflation. And those high rates, combined with high energy costs, just slam the brakes on the whole global economy. So, after tracing all these shockwaves from that initial gut punch in the market all the way to the risk of a global slowdown, we're left with the one big question. What happens now? And you know what? The answer really comes down to this one simple thing. Time. How long does this last? If the conflict is short, the world can take the hit. Markets will bounce back, oil will calm down. But if this drags on for months or years, all of those bad things we talked about, high inflation, slow growth, they become much, much more likely. Duration really is everything. And that leaves us with one last kind of sobering thought. For a long, long time, investors were taught to just focus on the numbers, on earnings reports and economic data. But in the world we live in now, maybe these sudden, violent geopolitical shocks aren't the exception anymore. Maybe they're the new normal. And that's a question every single one of us has to think about.